Welcome, everybody, to another episode of the Good Deeds Note Investing Podcast. I am your co-host, Jamie Bateman, flying solo as a host today. However, I am joined by a special guest. Today, we have Gary Wilson of Real Estate with Gary Wilson. Gary, how are you doing today?
Fantastic. Thanks for asking, Jamie. Yeah.
Absolutely. So I had the pleasure and honor of being on your show a few months ago, which is how we got connected. And that was really fun. So I do recommend our listeners go back and listen to that and listen to the rest of your shows as well. I know you've got there are many different rabbit holes we could go down today because you've got a ton of experience with real estate investing and realtors and books and lots of things we could talk about. So if you don't mind, for the listeners, can you dive into your background a little bit for us?
Sure. Well, it's interesting, sometimes in life you plan and prepare and do all the typical conventional things and you follow a path and things work out. But I think probably half the time or better, they're just, crazy accidental events and introductions that really cause big turns in your life. And that's what happened to me. I went to college to study computer science, which I actually did do, and I did manage to graduate in spite of all the beer. But in the summer orientation before freshman year, we were all called down to go and take placement exams to see where we'll start off with what they call the core classes, English, math, and all that kind of stuff they still do. And lo and behold, I meet this guy named Socrates, and we were became fast friends. It was like blood brothers from the moment we met. And we were headed back to the student union building and figured we'd see each other when the semester started. And lo and behold, our parents were sitting there talking to each other. We're like, well, this is pretty prophetic. And one of the dads said, his dad said, why don't you guys be roommates, And we called whatever that department is in college. They said, yeah, we'll let you be roommates. And we never found out who our other roommates would have been. We never met them. But it turns out Soc's dad was a big investor in Richmond, Virginia. He was a Greek immigrant. His mom went to Greece for high school graduation. Her family is also Greek, but second generation. They wanted to send her back to meet the family. And she came back 3 months later married to we call him Jim DeMette. He shortened his name and Americanized his name. Turns out he's a big investor. And when we graduated, we were like, typical go out, we're going to go rent something. And his dad said, oh, no, you're not. You're not going to rent anything. You're going to buy. So we decided, okay, we'll buy. And we made an offer on this great 2-bedroom townhome a block away from the ocean. And we called his dad. We're so proud. He said, he was yelling and said, you guys are idiots. He said, get out of that deal right now. And he said, I'm going to come down. And he said, you're going to buy a property that you're going to make money on. And we're like, okay, you got our attention now. So we did. Bought a 4-bedroom, 2-bathroom house. We house hacked it. We rented out the other 2 bedrooms to 2 other guys who paid our rent. And this was in January of 1986. Interest rates were still through the roof. So we assumed the owner's first mortgage. It was a VA mortgage. He was in the Navy. He had a second mortgage that we refinanced with our own second that his dad, Soc's dad, co-signed for. And then the remaining equity, we gave him a note for a third position. And that's how we did it.
Okay.
2 years later,
that's pretty cool. I mean, but you couldn't have done that because house hacking, Brandon Turner started house hacking. He was the first one to ever do it. And no, I'm kidding. I'm kidding, but he coined the term, I guess.
Brandon and I are in the same mastermind group called GoBundance, and he actually endorsed my last book, which is my 7th book.
Okay.
Because I talked about this whole thing about creative purchasing techniques and how it has its place. It's just not every place. And what I try to get people to do is to get on a cash basis as soon as possible. I know it sounds crazy, but I'm telling you, the reality is you will get much better deals using cash, and later on you can finance from a position.
I'm curious about that, and we'll get more toward kind of where your portfolio and your businesses look right now. But you mentioned that, I think, on the episode I was on, as far as being on a cash basis. And do you mind just quickly drilling down on that? What does that mean exactly? I understand obviously buying a property for cash without using a loan, but what does operating on a cash basis mean exactly?
Yeah, exactly. Really, what it is, it's a shift from leading with a loan, leading into a transaction with a loan, to leading with cash.
Okay.
It gives you a much stronger negotiating position, and I mean your own cash. I don't mean people sometimes will cheat and they'll call and say, hey, well, I'm going to make a cash offer.
Mhm.
And then you go digging, you find out they don't have cash. They're getting a
Mhm.
loan from some other private party. That's
Mhm.
not cash. That's leading with a loan.
Mhm.
And number one, it's you don't want to say something that's not completely accurate. You want to be
Sure.
authentic and genuine because your reputation is everything. So back to the technique though.
Yep.
What I did is in the beginning, I bought my first couple properties with 20% down. So I did start with some cash, not all cash. And
Mhm.
I was just a very disciplined person. I started saving from day one and played the mutual fund market, did well with that. And so when I got into real estate, I realized, okay, I can borrow private money for maybe 10%, get hard money for 15%, or I can get a really cool bank loan for like 7%. Okay. And which is less expensive, obviously, than 10 or 15.
Mhm.
Fewer points. And yes, they go against your credit and all that, but you know what? That's part of the game. So I decided, well, I'm going to play that route. And turns out I start off with an equity position and a stronger cash flow position, because if you start off with some cash, at least you have some equity, right? And
Mhm.
if you do that, you also have a lower principal balance, which means you have lower mortgage payments. So you have better cash flow position.
Mhm.
And what it did is it may look like it was slow in the beginning. And maybe by some people's standards, it was slow, but I did buy 10 buildings that first year. I
Wow.
was 35 years old, and it was duplexes, fourplexes, threeplexes. It was actually worked out to be 30 units by the end of the first year. And I was making enough in cash flow that met or equaled my corporate bank salary. I was a corporate banker doing mergers and acquisitions. I was doing pretty good. They kept promoting me. I was up in upper level management, working directly
Mhm.
for the executives. And that was not fun. I mean, literally, I had a cot in my office. That's how bad it was. I
Mhm.
stayed working 2, 3, 4 in the morning, go home, see my kids in the morning, sleep a couple hours, go back. And they kept promoting me because I kept doing it. And I thought, well, this was a big trap and I wasn't getting anywhere. So I started
Mhm.
investing, and I used my cash to start off. And then quickly I had collectively equity across all these properties, plus equity in my own home, right? And I still had the 401k and all that. So I was looking pretty good when
Mhm.
thinking, boy, I'll just stop right here. But I'm an entrepreneur. Entrepreneurs don't ever stop, right?
Right.
So here's what I did, guys, and I want you to everybody write this down. Um, I was able to secure a business line of credit. It's called a commercial line of credit in a second position against the equity in those first 10 properties. That's exactly what I did. And to this day, people will tell me, well, you can't do that because the commercial lenders want to be in first position. Of
Mhm.
course they do, but they're also business people. And if they see a good deal, right, and you have good terms, they'll do the
Mhm.
deal. So I found a private commercial lender who
Hmm.
did the deal, extracted $107,000, went out and bought the next property
Hmm.
for cash.
That's interesting. I hadn't heard that one. So
Yeah.
the properties were all still collateral for this line of credit that was a business line of credit. I'm imagining it was also a recourse loan where it's still you're personally liable, like you alluded to
Correct.
earlier. Um, but that gives you a lot of flexibility for when a deal arises, right? And then you can go
Yeah.
and purchase the deal. That's pretty neat. And not a lot of people are doing that these days, I don't think.
No, well, a lot of people here, unfortunately, that, well, you can't do that because commercial lenders want to refinance everything to be in a first position.
Hmm.
And I agree that most of them do, and most of them will not budge on that. But you keep
Hmm.
digging and asking and finding. And surely, there's the old saying, ask and you shall receive. Well, I kept asking. And I found a commercial lender, this licensed commercial lender who
Hmm.
did the deal with private money. And so I wasn't paying hard money, wasn't paying a
Hmm.
lot of points. And what really cool about it is this: after a year, it was a 9-unit building. I fixed it up, raised the rent, so it was worth much more. I went out and got a brand new loan on that building. And remember, now that loan is in first position,
Hmm.
right? Because I used collectively equity from other properties through a line of credit that did not create a lien on the property. So when I got a brand new first mortgage on it, it was way more than I needed to pay back the line of credit. So I paid back the line of credit, put cash in my pocket, still had plenty of cash flow. And by the way, what do you think that lender did for me on that line of credit when I just added another income producing asset to my bottom line and paid off the line of credit? What do you think his next move
I
was?
would guess they bumped up the limit.
You raise the limit. Yep. And everybody listening, I'm telling you, that was the tipping point for me. And that eventually led to me purchasing a 90 unit building within a few short years. And, the rest they say is history. Did the same thing. We were able, when you work with the right kind of banks and you have a track record, it actually gets easier. So I want everybody to really just let that sink into you. It may look hard in the beginning, and maybe it is. And everybody, we all start with different hand of cards, right? But the point is be diligent, be persistent, be consistent, and don't ever take any money out. Just keep putting it back in, right? What I mean by that, I'll give an example is on the other properties I had, what I started doing was taking the excess cash flow and started paying down and paying off those older, smaller mortgages, which
Okay.
gave me stronger equity positions and no liens on this property. It became easier. So think people never heard of the Bird method, right? Buy,
Yep.
model, rent, refinance. I essentially was doing that, but I kept doing it on a bigger scale and using my technique of leading with cash to get the better deals and then replenish when I was ready to go for the next property.
So what, sorry to jump in. What does it look like for you today? I know you got a lot of things going on. I know you're a busy guy. You're still a very hardworking guy. What does your portfolio look like? What do your businesses look like today?
Well, I'll tell you exactly what I'm doing. Being that I'm an old banker and IT, as you can imagine, I'm a numbers guy. So I do a lot of research. I love to learn. In fact, in my corporate days, instead of going out to lunch, Jamie, what I did is I brought a brown bag lunch, went up to the corporate library and studied for the entire hour every single day, Monday through Friday. I learned all I could about the markets, the business, trading, everything. So I took those skills and applied it to real estate. So here's what's happening right now. Obviously, we're at or near the top of this market. Everybody agrees. The inflation, I know that the news is telling you it's 5.4%, but watch what they call the breadbasket. They came out with that back in the 70s. Breadbasket is the typical basket of goods that you and I buy, milk, bread, eggs, gasoline, toiletries, whatever. Well, what the government does is they manipulate the basket of goods. They'll take out the things that have high inflation and replace it with things that have low inflation. So they artificially say it's 5.4%. But everybody that's been grocery shopping in the last couple of weeks or has bought gas knows it is not 5.4%. I mean, a roast, we just bought a roast for $36. Okay, that's ridiculous. So,
wow.
So in any case, people who really in the game understand that inflation is real.
Sure.
And inflation will kill any economy given enough time. And that's going to happen. It's a mathematical certainty. It's nothing to be afraid about. It's something to prepare for. Okay. So now, having said that, leading up to this, obviously, it's been a great run up. And we've had a 10-year run in this recovery, easily. Best we've ever seen. Strongest before the pandemic, all indicators, Forbes, Fortune, Money, Barron's, all of them touting the economy is the strongest economy they've ever seen in recorded history by all measures, right? Unemployment across all demographics, everything was as best as it could be. Well, what that leads to is increased prices, right? And this shows up in real estate big time. Now, the rents have not kept pace. Rents have definitely been going up a lot, but not at the same pace as the values. So the traditional rental market, where you buy a building or a house, whatever, rent it out to families and young couples for a year, and you still need that market. It's just not as profitable as it was 10 years ago, right? Not even 5 years ago. So what we're doing is we're leaning more into Airbnb. It's been around for 12 years now. It's public, right? They offered their stock back in the spring. It's now considered a mature sector in the industry. It ain't going anywhere. I don't care what the neighbors say, what the hotel business lobbyists say. It's here to stay. Consumers want it. It's here to stay. There's other sectors like the corporate housing sector. Corporate housing is short-term housing, it's between 30 days and a year. So it's traveling nurses, it's traveling executives, traveling contractors that get 6-month jobs. So there are companies where they will pay sometimes twice or more the prevailing rental rates because they get a furnished place. They don't have to pay utilities. And the thing we like as landlords is they show it by themselves. They're not coming in there with children and dogs where there's going to be a lot of heavy wear and tear on the units. They're coming and they're going to work during the day. They come home and sleep at night, and you collect all your rent. You don't have all these court cases. It's way easier, and it's
Hmm.
one of the fastest growing sectors. So I'm letting the cat out of the bag here. As you might imagine, in the last year and a half, would you agree, traveling nurse sector has grown dramatically?
Yes, I would think so.
It has been great demand for housing for traveling nurses. Okay,
Sure.
they're making a lot of money. I don't blame them. Go travel and get double what you get working at the hospital.
Yeah,
Right.
absolutely.
So, any case, so we're serving that market. And when it comes to Airbnb, we're not just buying any old place. We specifically search for properties in areas where there's a lot of activities. In other words, people always think of areas like Orlando. Orlando attracts destination travelers, vacation travelers,
Hmm.
and also business travelers. It's a great area to own properties because you've always got people willing to live there.
Hmm.
And a lot of business travelers, believe it or not, I'm one of them. I started using Airbnb because I was just tired of the hotel.
Hmm.
Nothing against the hotels. I love Marriott, made me a lot of money, but it's the same room over and over and over again, and the
Sure.
same cheap breakfast over and over again. I go to an Airbnb, I get a home cooked meal, I get a private bedroom with a bathroom, a deck, a patio. So it's great business. So what we do is people will pay extra money on weekends when there's a big football game, a big baseball game, a big hockey game,
Hmm.
ethnic celebration like festivals, a
Hmm.
concert, things like that.
Hmm.
So we'll focus on areas that are reasonably priced and yet have all of those activities going on. So sometimes the beach areas don't have those. I mean, yes, Miami has a football team and a basketball team and a baseball team. Absolutely.
Hmm.
That would work. Okay. But if you go to the west coast of Florida, like Naples,
Yeah,
beautiful beaches, but you don't have a football team, a baseball team, or a basketball
it's
team.
true. Yeah,
So
yeah.
everybody,
No, that's I know a lot of people do think of Airbnb or short-term rentals as strictly vacation rentals, but that's far
no,
from that's part of it for sure. That's part of what short-term rentals are, but yeah, absolutely, it's much bigger than that. So you all are actively focused on that, it sounds like. And do you have other parts to your portfolio still? Do you still have a lot of your rentals that you bought along the
uh,
way?
uh, yeah, yes and no. I've sold a bunch of them, sold a lot of them, in
Hmm.
fact, several years
Hmm.
ago. And but I stayed involved where I provide funding and I get sometimes equity, sometimes profit share, and
Hmm.
oftentimes it's just basic cash flow coming or interest payments on the
Hmm.
debt. Um, so which leads to another subject we'll talk about in a moment, which is notes.
Yeah.
But right now, one of the cool things we're doing is anybody paying attention to the life insurance business realizes that yes, we've had whole life for hundreds of
Yep.
years. Universal life going back maybe two generations, back to the 80s and 70s.
Hmm.
Um, but index universal life is I like it even better. And you do build up cash value that you can borrow against for your own investing. Okay. But there's also components where you can use a conduit account inside of a life insurance or associated with a life insurance policy to be able to buy a bigger policy, dump all your income in there, whether it's from a business or a W-2 job,
Hmm.
and then you extract enough each month to pay your bills. The remainder stays in there, allows you to buy a bigger policy, with up your cash value faster, and the residual ends up staying there and becoming another stream of income 30 years down the road in your retirement years, right? It's
Hmm.
just amazing. These are not your grandfather's insurance policies. So we're getting into that even on our team. We have a big production team around the country
Hmm.
called the Global Investor Agent Team, and these are real estate agents that we train to work with us investors in now 25 states. We just launched it last year, and we're already in half the country. It's amazing, but they're investors too, and they learn how to identify, analyze, negotiate properties on behalf of us investors. And anybody can participate. Anybody, if you're interested, I mean, maybe at the
Hmm.
end of the podcast, I can give them a website or something. But
Yeah,
there's
we can put it in the show notes. Absolutely, the link to to all that stuff. So how does that? So if I'm a note investor
Mhm.
listening to this, how does that life insurance thing relate to me
Yeah,
directly?
good question. So just like any note, a note where you're borrowing against the cash value of a life insurance policy, just like any other note, is a commodity that can be bought and sold. So you can, like, let's say, for example, I have a whole life insurance policy or universal life. and I borrowed against my own policy to flip a home, for example, and I might agree to pay myself 6%, okay? But I might also get to pay myself 10%, which is very attractive right now in the marketplace. Remember
Sure.
that what the bank's paying right now is
Next to
close
nothing.
to zero. What the government pays is actually zero. So we consumers are benefiting from this. If you go get a traditional mortgage, maybe 3.5%. Commercial might be 4.25%.
Mhm.
But if you can produce a note that's paying 10%, there are a lot of people who'd be interested in potentially purchasing that note. Okay.
Yep.
It's not just for you and your own cash value and your own properties. I mean, you could, Jamie, I could borrow against my cash value, give you the proceeds so that you can go flip a home, and you pay me an interest rate or maybe a share of profit. There's so many ways you can structure this. It's
Yeah.
not regulated like the banking industry is. It is
Right.
regulated differently. Yeah.
Yeah. No, I really, it's a whole, we talked right before we hit record. I do kind of infinite banking myself and some version of that. And doesn't mean I'm the world's leading expert on it, but there's so many paths, like you just said, there's so many ways you can go about it. And it's amazing once you get into it. Like you said, first of all, these life insurance companies have been around since, most of them before the IRS was a thing. And there are many commodities within this world. So, and the loans you're talking about, and then there's even the life insurance policies can actually be bought and sold as well, which is a whole secondary market for that. But yeah, I mean, I haven't gotten Chris on board with this yet, but I use my policies to, the way I look at it personally is, my note business, they're three, and the same thing for real estate, but there's three essential, three big buckets that that every action or every activity we work on has to fit in one of these three buckets. One is raising capital or finding money, right? That could be going out. Chris and I have a note fund where we raise capital from other investors. That's one way of raising capital. But another way that I raise capital is through these whole life policies that I use, and I borrow against them to invest in my note business and then kind of arbitrage the difference. And then the other two categories are asset management and finding deals, which are very important as well. But that's really interesting. Was there an impetus there? I mean, there must have been, but
yeah,
why did you kind of start really actively moving into that space?
Yeah. Well, of course, being an entrepreneur, the radar is always open for new opportunities. So way back in the 80s, I had my first whole life policy. I was blessed to be able to know some fairly affluent people in the early days. And of course, I became an investor, eventually got my license because the realtors didn't know how to help me. So I thought, well, I'll get my license. And that led to the brokerage company. That led me to other introductions to some well-known people that some of you probably would know some of their names if I mention them. But what I recognize is all of them had whole life insurance policies, big ones. And they weren't just doing it for the death benefit. They were doing it they're partly to help retain the lifestyle of their loved ones should something happen to them, right? Because a lot of these guys are business owners, and a lot of us business owners know that we're actually the business. And if something happens to us, a lot of times the business will struggle. So the family's left with this business that now is worth less and maybe making less money, unless they have this big giant death benefit, right? To maintain their wealth and maintain their lifestyle. Well, the other benefit was cash value. And they were using the cash value to do their investing. So they were not going to the banks. And it's a lot more flexible. The loans it's your money that you're borrowing against them. And even if the life insurance company gives you the money, it's still collateralized against your cash value. And then they would do other cool things. They would get a loan from the life insurance company that was further collateralized by a big chunk of land, for example. And then instead of just borrowing us the cash value, they would get a loan, even on a life policy they just opened up the other day. They would get a loan that's 10 times what that value is, because they have this additional collateral. But yet it's still an internally controlled loan. It's not, they're not going up against the federal banking law for conventional mortgages. And it doesn't mess with their credit. So I started watching that. And I know people now that have 20 or more whole life policies, life insurance policies. And there's other things too. There's some other benefits like that money inside of there. For one thing, if you were to receive a death benefit from another person's policy, they name you as beneficiary, that's non-taxable. Okay. But also inside there, that growth, right, of the value is also non-taxable, right?
Yeah.
So,
that's what blew my mind when I actually took the time to study this, a couple of years ago. It was like, wait a minute. So essentially a dollar is doing double duty. It's growing inside the policy, but I can also borrow against it and create another dollar over here and then kind of bring it back. And it's a really powerful strategy. And that's interesting. I love the fact that, your mind is always open to new possibilities and you're always looking for kind of ways to go about things. You don't just take no for an answer and, keep working your corporate job and stuff money into your 401k, which was the 401k itself is a lot younger than these policies are as far as history goes. But that's really cool. I love the creativity and not taking no for an answer. And it's obviously, you've done well going about it like that. So you mentioned briefly, I just want to back up for a second. So I think you said 35 was maybe when you kind of really started investing in real estate. Is that I just wanted to touch on that because you might have people are in their mid 30s and they think it's I missed the boat, or it's too late to be a real estate investor. Was that what you said before?
Yeah, well, actually, my oldest student, by the way, is 84 years old. So there's plenty of gas in the tank, believe me. But for me, in the beginning, what happened? So Socrates and I bought this house. 2 years later, after having fun for 2 years, bachelors on the beach, I fell in love and got married, right, and moved to Western Pennsylvania in the Pittsburgh area. But I remember when we closed on that property, we went down to Mr. DeMett's, one of his beach houses in the Outer Banks, and he's pounding his chest, saying, "If you boys do what I tell you to do, when you're 35 years old, you won't have to work for anybody else." Well, we didn't do that. We bought boats, we bought Vic trucks, we put everything we said what he told us to do. Right. So I wake up 10 years later, 35, in the corporate world, getting promoted, going up through the ranks, and hitting it every second of the way. And he had passed away since then, by the way. And I remember thinking to myself, what if I had done what he had told me, right? And I said, I'm going to do it. So I went out and started investing, paid for a mentor, an elderly gentleman named Gerhard Flugfelder, and he's since passed away. He was 72 at the time, took me under his wings and showed me how to do what I did that first year when I bought those 10 properties and went and got that commercial line of credit. That was kind of on my own, but he made the introduction. And the next year I bought 10 properties. Then what I did is I took a year off, paid off the secondary debt. I took out a home equity line of credit, personal line of credit, paid all that off. So they had even stronger equity and more borrowing power because I had great credit. Then went out and then I started being more strategic and buying bigger properties, 5 units, 9 units, things like that. By the time I was 40, I was well positioned. I had the cash flow coming in that exceeded my bank salary, which was pretty good. It was already over 6 figures at that time. I also had enough cash on hand to manage 4 different projects in different phases, purchasing, remodeling, whatever. I was able to manage 4 projects on a cash basis. That's when I knew I was independent. And that's when I made the leap and got out of the corporate world. And thank the Lord and never look back. It was really, that first year, Jamie, it was strange because I'm literally going out on my deck in the morning with a newspaper and a cup of coffee in my bathrobe, watching my neighbors drive to work. And I felt guilty. For that first year, it was a mental, emotional struggle because I just didn't, my programming from childhood, we didn't have a lot of money, right? And my grandparents on my mother's side were basically, month to month, paycheck to paycheck. On my father's side, there was some wealth in there, but it was from they got through the Depression era where they saved everything and put money in mattresses and suitcases. So I had some really weird programming I had to overcome. And it took me about a year, and I finally realized I actually earned this. It's like I bought my own freedom, right? And
that's really interesting. Do you mind just diving, I know we're heading toward the end here, but diving into that kind of the struggle that you face there, and then the mindset
Yeah.
shift you had to make. I mean, because most people will kind of think, oh, this glorious moment when I leave my corporate job, and that's, I just sit on the beach and drink Mai Tais or whatever. And
Right.
but I've heard this from other people as well, that
Yeah.
it can be a little bit of a struggle. Do you mind kind of just drilling down on that a little bit?
Absolutely. Yeah, well, the first thing was the fear. I mean, I could have left earlier, but I had, 5 weeks vacation, big giant 401k, medical, dental. I mean, I was, on the way to the C-suite. And so when I left, I had a lot of negative feedback from family and friends like, what are you doing? Are you nuts? Are you crazy? People dream for that job, But I was not happy. So when I left, I had to get over all that first. But for the next year, and ever since then, guys, I want to tell you, you can never learn too much. I would study and learn everything there is about how our minds work, right? The connection between our mind and our body and our spirit, study all of that, because that is way more important, way more valuable than anything I can teach you academically about identifying, analyzing, and negotiating deals. That's the easy part. I can teach you how to make money in real estate. The hard part is, will you do it, and will you stick with it, and will you be in a comfort zone, will you be in abundance with what you have? I was in scarcity back then. Now I'm in abundance. So I did have a coach for a long time, private coach named Janai Lane, wonderful person, and she helped me really see how my programming was affecting me and how to undo it, and really operate from abundance. So now what happens is, instead of me thinking linearly, linear is thinking, I'm going to set up a brokerage company in Wichita, Kansas. Okay. That's linear thinking. That feels like big thinking to most people. Okay. But when you're in abundance mindset, you think exponentially. And what you realize is, if I can do it in Wichita, Kansas, I can do it in every metropolitan area in the country. So everything we do now, we do on a national scale. We will launch it, beta test it in one location, but then we quickly expand exponentially.
Yeah. No, that's great. I interviewed Rod Khleif a while back. I don't know if you talked to him before, but just a similar vibe as far as mindset. I think he talks about mechanics being 10% or 20% of actually executing, actually getting a goal accomplished, but mindset is 80 to 90% of it. And just thinking bigger. That doesn't mean, like you said, you got to test it. You got to actually you have to know that it works, and that, but you can't skip those steps necessarily.
Yeah.
But if you can do it once, you can do it 100 times, 1,000 times. So
yeah.
I love it. So then you were able to get past that challenge of that fear and maybe guilt, it sounds like, or different negative mindset. And then what would you say, looking back, what was your biggest mistake, or maybe a regret you have?
Oh boy, selling some of the properties.
Okay.
There have been properties that really caused me a lot of headaches, but at the end of the day, I always made money, so I never really regretted buying them. But I can tell you, almost every property I've sold, I regretted selling, because it just, and one of my best friend's fathers told me this when I just got out of college. I bought that house, and he said, "Good move." That Mr. DeMett taking you like that was a very lucky break, and he's right. But what he told me was buy as much as you can as early as you can, because real estate is always going to go up. Yeah, we have dips, nothing like the stock market. Real estate, just like in the last recession, real estate went down. Right. But over time, I mean, that property I paid $63,000 for in January 1986 is now worth about $500,000. Okay. So wow. You better believe I wish I'd have held on to that one and all the other ones too. So keep your properties. So guys, if you own the property, unless you're dying, keep the property. Okay.
No, that's good. I've heard that before. So as we head towards the final section here, I know obviously this is the Good Deeds Note Investing podcast, and we sent you a few questions before this, and I read through your answers. And one of the questions is about a good deed that you've done through your investing, and I'm sure there's too many to mention, but I think you had one in mind. Do you recall that?
Yeah. Well, the early days, I started sponsoring families from like Bosnia, war-torn Bosnia in the late 90s, and brought them in, put them in my units, gave them a break on the rent and things like that. We leveraged our assets to serve the community. Later on, it was people from Burma and Nepal in the mid to late 2000s that we ended up taking one entire building and turned over at the time about 75% of the units to refugee families. But that led me to go back to a vision I had many years before called the Healing House Foundation. So now, because of our investor network and all these investor agents we train, we were able to purchase properties in communities that have a need for housing, remodel them, but then flip them into service as opposed to profit. And that, there's a whole business structure there using charitable remainder trusts and so forth. Way too much for this podcast. We can do another one if you want. But it's a wonderful way to gain fulfillment from what you're doing, because that was one of the key struggles with me, is I wasn't being fulfilled in the early days. Now when I leverage this, and the more that I give, it's like the more I receive, and it's just my very next call is actually with a minister, recovering addict, who has a program for other recovering addicts. And we're thinking of implementing that through the Healing House Foundation. So everybody can participate as a giver, or everybody knows somebody who's struggling, particularly with addiction and more likely a need for housing. Look me up, go to realestatewithgarywilson.com. It's easy, realestatewithgarywilson.com. You'll see a work with me form. Just click on it. Or here's another one is for realtors. Just find out more, click on that, just leave your email. And I'll share information with you. You can get all kinds of free books on that site, by the way. But we talk about the Healing House Foundation, and we take meaningful steps to make it happen. Because at the end of the day, you can't take your properties with you. You can't take your money with you. But you know what you can take with you is a fulfilled heart. Serving you will gain more, I promise you, by serving others. We call it prosperity through service. Serve others first, and you shall prosper as a result. I wish I learned that lesson when I was in my 20s and 30s. It took me till I was in my 40s and 50s to figure that out. It's the biggest lesson I've ever learned. And you can't measure that kind of happiness. Okay.
No, that's phenomenal. I mean, it's hard for me to follow up with anything after all that. I mean, that's really good. I love the whole mindset of being, obviously, life is much bigger than ourselves, right? So, but it's refreshing to hear from a successful real estate investor that it's not all about the money and themselves and greed and truthfully, I don't think that there are many successful real estate investors who really are only focused on themselves. I think they get a bad rap, but that's a really refreshing to hear from you, that how you're able to. I mean, there's nothing wrong with profit and success, right, and wealth and cash flow for yourself and your family, but the fact that you're giving back, I mean, that clearly adds a lot of purpose to your life. It sounds like so that's really good. I know you have that call you just mentioned, and I know you're a very busy guy. You mentioned the website, and I've checked out your website before. There's a ton of free, valuable information there. So I do recommend all of our listeners go check that out. Is there anything else you want to share with our audience before we hop off?
I did just remember, if you go to the website and you click on members area, there's another page that you go to. The left side is for people who are already members. The right side is for people who want to be members, and you can become a member for free for like 30 days and grab all the books and all the resources. I mean, it's like Christmas time. Just grab it all for free. Of course, we have the podcast, Massive Cash Flow Podcast, and the YouTube channel, Real Estate with Gary Wilson YouTube channel, with I think now 16 different playlists and I don't know how many hundreds of videos. But my thing is learn as much as you can learn, okay? And get all the good learning for free as much as you can. And we got a ton of it. So have that and treat yourself. Christmas is coming up. Give some free gifts to people.
There you go. You've got books on flipping, rental properties. I mean, pretty much every facet of real estate, I believe. Is that correct?
Wholesaling and commercial property management. Yeah. I need to actually update it because the industry is changing so fast. I mean, it's crazy,
Yeah, but I think that's really valuable, is to educate yourself, invest in yourself. Yeah. No one knows we talked about market conditions earlier, inflation, and that's obviously here, but we don't know exactly what it's going to look like in 5 years as far as real estate, pricing or any of that. But the more you can learn, the better off you are in that position when it does, when those changes do occur, and then you're informed and can make an informed decision. So, yeah, Gary, this has been phenomenal. I think we should have you back on the show if you would be willing to
Sure.
join us. There's so many different paths we could go down. We've just barely scratched the surface on really any of them, and I know there's a lot we could do here next time. So if you'd be willing, we'd love to have you back on the show.
I'd be honored, and thank you, Jamie, for having me on. It's a pleasure to do this. I love to teach. It's my nature. And by the way, I got a new Hawaiian print shirt. I got a few more. I'll use another Hawaiian print shirt for another podcast. How about
So
that?
there you go. We look forward to that. I love it.
Okay.
So, all right, Gary. Well, thank you very much. I appreciate your time, and for all those listeners out there, don't forget to go out and do some good deeds. Take care, everyone.
You got it. Take care. God bless everyone.